Hello, options traders. So I wanted to do this follow-up on the target earnings trade that I had shared last week. So this trade went hugely off the rails after the earnings announcement, but I was able to work this into a nicely profitable trade. This is going to be confusing it's confusing for me, and I've traded these things for years. So if you don't follow everything in here, don't freak out. Go back, watch it a second time. I think it will start to sink in a little bit. I also want to share with you, now I traded this in a 5-lot personally. The demo that I did here was a 1-lot. I'm going to also just kind of remove myself out of the picture here because we're going to need all the screen real estate. So let me just kind of close that out. But these are the different trades. These are my live trades. These are my live fill prices that are associated with these trades. So that's what you're seeing here is my live fill prices. Okay, this is the net price. So when I put this on as a double calendar, I paid 50-cent debit for it. But if you want to see the individual prices that I got filled on, those are the individual prices. And those are the prices that I've actually put into optionstrat here to demonstrate the various steps as I went along or as this trade progressed. Let me move these fills out of the way, but snap a screenshot of that if you want. And then you can kind of march this along as well. So the first thing is that, you know, back on the day, this thing was a double calendar. Let me refresh my screen here and let's see. So I need to widen my range, but I can't even widen my range enough on this because Target is trading now all the way up here at 130. At the time I entered this trade, I believe Target was trading down around the 109 range, somewhere in there. So let me just kind of put that in. Now I'm not sure why this isn't fully showing. It's probably because these options are closing here today. Why it's not showing the double tent that this calendar would have had. So there would be a tent here. Let me just get on my drawing tool. So this would have a tent here, then it would sag down a little bit, then there was another tent up here at the 112 price. So we're centered under 112 and we're centered under around the 105. So that's what that double calendar looked like, with of course the 105s being puts, the 112s being calls, and you can also see that I sold the shorter dated options here, the 1117s, and then I bought the exact same strike a week out. That's the configuration of a calendar. Now in a double calendar, what you do is you do one of these kind of below the market, is my preferred method, and then you do the call side above the current market. And I do that in what I think might be a realistic range. So here's a daily chart of Target. So I was anticipating prior to earnings that, you know, maybe Target would gap up into here somewhere, or maybe it would drop down into here somewhere. I mean, those were the couple things that I was kind of thinking might happen. Obviously, you know, Target shot up hugely all the way up here. So a 20% up move. So that instantly crushed my trade. You know, we're up here, so I'm almost instantly at max loss. Now, in a 1-lot, max loss was essentially going to be what I paid for this trade, which was the 50 cents or $50. So if I just let this trade expire here today, I'm recording this actually on Friday the 17th. I'm going to be sharing it with everyone next Monday. But today, when this expires, my front expires. Now, this is critical to note in calendars. My front strikes expire. My back strikes will not have expired yet. So there the double tent showed up all of a sudden. So anyhow, so the key here is that if you're trading calendars or diagonals, that you have to make sure that when these fronts expire, that you close these guys out too, or you're going to have directional risk while those are still on. Now, you may be okay with that. If you look at these and you say, ooh, yeah, I like what that does, that's fine. There are certainly strategies that would allow you to do that. But you need to understand that where I tend to trade delta neutral, where I'm looking at a pretty flat, T0 line, if you go and pull off the short strikes, those long strikes you just have on a long call, for example, or just a long put, that's going to leave you hugely directional, and you need to understand that. So from this position, okay, I actually saved this trade in multiple steps. So let me go look at the morning after earnings, the next morning when the market gapped up as massively as it did. I was a hurting piece of cheese on this thing. So this is the next morning. Again, I can't even really pull the range in here. This thing had gapped up so high, and I'm pretty much down my max amount at this point. This is showing that I'm down $34. Actually, it would have been more than that. But my first step here, my very first step, is I'm going to go ahead and I'm going to close my my puts in this case. So my short put, my short 105 put there, I can close for a penny. Okay, that's worth nothing anymore. Now keep in mind, I sold that particular put. So, and I sold it, if I come up here and I look, I sold it for $3.39. So I was able to buy that thing back for a penny. So that's almost full profit on that put. However, I also bought the 105 put for $3.63. That's also worth, again, virtually nothing at this point. So I lost that. And if I pull this down here, again, just so you can see, I don't know if I can enlarge this here easily. No, I can't really do it easily. But you can see, again, those are my two opening prices. There's the 105 put that I sold, and here's the 105 put that I bought. Okay, so basically the combination of those two, when I close those out, that was a loser. No two ways about it. That particular spread lost me money. About 20, whatever that was, 25 cents, something like that. So those were the loss. Nothing I can really do about that. Again, I went ahead, closed them out because those have no more value to me at this point. There's no value in any of them. I could have maybe left that long put in place since I was only going to get a few pennies for it anyway, in case Target happened to back up significantly for some reason. But for the sake of doing clean demonstrations here, I went ahead and I closed that trade out as well. So that was my first step. This is the morning of the 15th. So I opened this trade here on 11/13. And I opened it as a double calendar for 50 cents. Then on 11/15, Target gapped up massively. Again, there's that gap up. And then it kept running during the day. So it gapped up to here, just kept running higher, higher, higher. Now, you can see here from a technical standpoint, from my opinion, and again, technicals are kind of subjective, I'm looking at what I consider to be some significant resistance that Target was running into there. So I made somewhat of an assumption, right, wrong, or otherwise, that I didn't think Target was going to go significantly higher over the next few days from there. I kind of felt like it had already done what it was going to do. So based on that, and again, all of these steps that I'm going to make here, for the most part, are happening on the 15th, the morning after those nasty earnings. So I'm going to look at step 2 that I took in the trade. So again, step 1 was I just closed out my put spreads. That's it. So step 2, I started to roll this position into a strangle. So I did that by basically selling my 112 call, selling the 130 put. So I just rolled that. I basically sold this guy, and then I sold a 130 put, which was right about where Target was trading at that time. So that was one step in this process. Then from there, step 2, actually that was step 2. Step 3 was that I also then closed out this call and I rolled up and I sold a 128 call. Now this is a slightly inverted trade, and I get it that this is a little bit weird, but I don't worry about whether or not I'm inverted. And what inverted means is that my call in this case is a little bit lower than my put. Normally you have the put to the lower side, the call to the higher side. Because I did this separately, I did it at slightly different times. I did it based on how the market was moving at the time. So I turned this trade into this what's called a strangle. At this point, and I did this by the end of the day on the 15th. So at the end of the day on the 15th, this is kind of where I was at. And again, if we look at our market at the end of the day on the 15th, this is where the market was at. It was right there around that 130. And my premise, my assumption was that I didn't think the market was going to vary significantly from there. Again, largely because I felt like it had all of this overhead resistance in that area. So I just didn't feel like it was probably going to go higher. So again, that put me into this strangle configuration. The market did not end up going higher. So over the next few days, the market decayed to where I was able to basically take this trade off for essentially a full profit after I adjusted it all into that strangle. So I just wanted to walk people through kind of the process of taking this thing that went horribly against me. I could have just walked away from that trade. It wasn't a big loss. I could have just walked away from it that next day and just resigned myself to the fact that, you know what, I'm going to take max loss on this trade and it's going to be $50 and oh well, I took a shot, didn't work out. Instead, because I had that overhead resistance that I felt was probably going to stay intact, I could go ahead and make a move like this, but I also need to understand here that a strangle is 2 short options, and they are unlimited risk. Okay, so not something that somebody new in this should be doing, but that meant that if this thing ripped to the upside further, I have unlimited risk to the upside. If target were to rip to the downside, I've got unlimited risk to the downside. But again, after earnings took place, my premise was that most of the move was already in place. It jumped up to that 130. I was expecting it would probably stay in that area. You see, I gave it a little more room to the downside because if I figured that it was going to change, if it's going to do anything, it might move back down a little bit, which is why I chose, quite frankly, to leave a little extra down room in this trade. If I had more conviction that it was going to stay right around 130, well, I could have tightened this up further. I could have taken this 128, sold it at 130 into a butterfly and had more profit potential yet. But I wasn't sure at the time I did this. I was thinking that if this did anything, if target did anything, it was likely to potentially back up a little bit. So that's why I left some additional downside room. So again, here about 2 hours before the close on the 17th, I closed this trade out. Ended up pulling a nice profit out of that trade. I traded a 5 lot personally and turned it into just over $1,000 trade. But as a 5 lot, I had $250 in risk going into that trade. Where here I just traded a 1 lot with $50 risk, and again ultimately ended up using the same numbers that my live trade was, ended up pulling out around the 283 profit. So again, I know that covered a lot. I also know that its calendars can be a bit confusing, and this is even more confusing because I took a time spread or a calendar and then I rolled it into a straddle. And straddles can be a little bit confusing too. So if you didn't understand all this, again, don't freak out about it. Maybe watch it a time or two, and hopefully it will start to gel. But probably the single biggest thing, the biggest takeaway that anyone should take from this is the ability that you have here with optionstrat, that you can come in and you can model whatever you want to model. You can come in and model, well, what happens if I do this? Well, what happens if I do that? And that's the key to learning this stuff, is coming in, playing with tools like this, and seeing what those impacts have. And that helps you learn what your options, yes, pun intended, are going forward. So again, please like, subscribe, give me comments below if you would, knowing that people are liking this content and finding it of value. Of course, keeps things moving forward for everybody. So please do so. And thanks so much, everyone. Take care.